Good evening, everyone. My name is Paul Young. I'm just going to walk you through government policies in respect to transfer pricing and the term tax avoidance. Now, this is only one perspective of transfer pricing rules as well as tax avoidance strategy in terms of how companies move income around the world. You're more than welcome to go out to the various income tax bodies in the various countries, in the case of Canada, CRA, IRS in US, and so on and so forth in other countries. I'm not going to get into specific rules in terms of the market-based pricing. I'm just going to talk high-level view of transfer pricing, how it comes into play, and why it's a big factor across the globe. Here's a little bit about myself. I'm a CPA, CGA by trade, but I have significant experience in both academia, industry, as well as financial solutions. So I'll talk about what transfer pricing is. I'll talk about CRA's role in transfer pricing. I'll talk about Canada and the OECD mandate on tax avoidance. I'll talk about what common reporting system is as part of the OECD's Tax Avoidance Treaty, and we'll get into who signed the treaty. Transfer pricing basically is setting a price for goods and services. So when you start dealing with multinationals, you deal with good companies that are moving products around the globe. Therefore, they have to price those goods as part of the cost strategy of moving things around. And typically what you're doing is you're taking that burden cost and passing it to other entities that may have lower taxation rates. So that's where this comes into play. Most cases, in order to set pre-established transfer pricing rules, they're typically audited big time by the various tax jurisdictions to make sure they make sense. However, there's always ways to get around that in terms of things through R&D, different ways through interest of debt, to kind of move income around to lower taxation areas to basically maximize earnings. This is all part of overall corporate strategy in terms of growing income, but also using the various tax jurisdictions to kind of minimize your tax impact. Talk a little bit about CRA. It's the government body that oversees revenue taxation policies, the Income Tax Act in Canada. So in the 2016 budget, they have actually are looking at the BFPS project. It's the OECD mandate to look at tax avoidance. They haven't signed on to the treaty yet, but they are very interested in looking at transfer pricing and the whole idea of reporting taxation as part of trying to look at ways to get more income back as part of tax policies. What is a CRS? Well, it's a common reporting system that will come into play as part of the overall mandate to manage income and different policies as part of alignment in terms of deductions. And that's really what it's coming in. It's a common framework that's going to come in play as part of any countries that sign on the OECD agreement. What it basically means right now is that under the current policies in the government, they're actually going to adapt the CRS reporting effectively July 1st, 2017, so that's something to bear in mind. The U.S. hasn't committed yet, but chances are at some point they'll make a decision. But the idea is that they're going to put more stringent tax reporting as part of looking at foreign jurisdictions. So in terms of the annual reporting, there'll likely be more of a requirement as part of looking at taxation planning as part of the mandate in terms of filing the tax returns. Now, who has signed the deals? Well, you've got Australia, Austria, Belgium, Chile, Costa Rica, Czech Republic. Who hasn't signed it, which is very interesting, is Canada hasn't signed the agreement, the United States hasn't, Romania, Hungary, Brazil, Argentina, Colombia, Cayman Islands, Russia, India, China. Now China has talked about signing the agreement, but they haven't yet signed it. The reason I picked on India and China, and as well as Brazil and Argentina, these are countries that are known in terms of low cost areas and different areas that move things around. Same with Romania and Hungary, Eastern European countries, is where a lot of technology companies as well as other entities do work as a way to maximize their income by doing work in those countries in terms of transfer pricing. So it's good to understand that in terms of who hasn't signed into it. Likely what will happen is as more and more countries come in alignment, you'll likely see more pressure on other countries to adopt the same trends, and that'll be interesting to see how everything plays out as part of the corporate strategy in terms of where R&D is done, in terms of how goods and services are moved around the globe, in terms of the overall positioning of how corporations will operate. Now, the focus area is some key areas. Interest, income, and deductions are one area that they're looking at. They're actually looking at alignment to make sure that they're consistent in establishing transfer pricing rules And there'll probably be more and more disclosure around everything from dividend payouts and different things in terms of goods and services moving around the globe to understand it. The other thing too is we live in an era of e-commerce and digital economy, and that's something that's going to come and play in terms of taxation, because the key is a lot of this stuff is becoming so virtual, which means now in terms of nexus strategy, it's all managing income. So you're going to see where income is earned, and you're going to want to see more and more pressure on where that income is earned. That's where it's taxed. So you want to make sure that you have a possible ability to transfer that, and that gets into cloud environments, it gets into different models, and that stuff will all be reviewed. You'll look at basically rules around ownership control. We've seen that in a lot of countries as well. So this kind of gives you an idea in terms of what they're looking at in terms of policies, in terms of reports, and how they'll streamline these policies as they move forward. There's a bunch of presentations out there already on this, on the common reporting. Also YouTube channel discuss it. You're more apt to reach out to me if you have specific questions or concerns or need more guidance in areas, especially when you're looking at reporting solutions, because you may end up seeing that Excel is not possibly going to be able to accommodate you. You may end up having to look at a solution like Cognos Disclosure Management that allows you to create these templates for reporting as part of the overall mandate. So you likely want to be looking at how you do your reporting on a corporation perspective. But also you're going to be want to work with your various CA, CPA firms around the globe to ensure that your transfer pricing rules and any sort of income movement is going to fall in line with the OECD reporting and the mandate, as well as what's happening locally with any sort of taxation rules, both your domestic market as well as international markets where you plan to operate. So it's very critical to sit down and do proper tax planning with experts, and they'll walk you through scenarios and solutions as part of the overall mandate. So this kind of gives you a good presentation in terms of what you're seeing in terms of transfer pricing, because it's a big issue right now, because countries are strapped for cash in terms of revenue, so they want to make sure that they're maximizing their revenue opportunities by ensuring that the rules are not being manipulated for the benefits of the corporations, but to ensure that the tax system is fair. And really that's what it is. It's about having a fair system. It's not about hammering multinational companies just because of the way they operate. It's to make sure that there's fairness in the system. That's what income tax is about. Thank you very much.